market ideas for your portfolio. Our next guest manages more than $1 billion. He sees some buying opportunities in this market today. Yu-Dee Chang is the Chief Investment Officer at Ace Investment Strategies. He joins us now. Yu-Dee, great to have you back with us. Before we get to your picks, question of the day is, got some good economic news. We're on track for 3 days of gains for the benchmark stock indexes. Have we seen the worst? The VIX is coming down. Is calmness coming? Are we going to just continue to build, and will we retrace the losses? We're close right now.
Yeah, I think so. Let me give you two things, Laurie. It's kind of interesting. Two things both happened last week. One, VIX above 40. Now, this only happened 5 times since 1990, where VIX was created, when the fear index goes above 40 in the subsequent 12 months. On the average, the S&P has been up about 13.5%. And second thing is that last week, 90% of the S&P 500 stocks went below their 200-day moving average. That only has happened 10 times throughout the past 30 years, that is. And every time when it happened in the subsequent 6 months, the stock market is up on the average about 6.2%. Last week, personally, I think it was a no-confident correction on the Obama administration as well as our Congress. I think now the risk trade is back on again. I think there are buying opportunity in the markets.
All right, so let's get to some of those buying opportunities. One other quick thing, though. Boy, you still got Europe going on. There's a big meeting tomorrow, and this really rattled investors last week. So, I mean, there's still headwinds out there. There are still risks. So have you ratcheted down your risk at all through all of this?
Yeah, absolutely so. We're in the camp that we're in the so-called secular bear market since 1990. Secular bear market doesn't mean the market is going straight down. Usually it means for a period of time, the market on an overall basis goes nowhere. We have a couple of good years to the upside, followed by a couple of bad years to the downside. And that's exactly what we're seeing. Thus, we believe in buying the lows and selling the highs. Do not chase the highs. So I think as far as risk is concerned, you don't chase the high. That's the way to do it, and to buy some values when the market, after the market correction.
Good reminder, some classic advice, Yu-Dee. All right, so no surprise you like consumer staples. You say this is a cash-rich group, the XLP.
Yeah, absolutely. Consumer staples I do like, especially those international leaders. We're talking about Coca-Cola, McDonald's. These companies, in addition to being pretty much diverse throughout the world, so they have a little bit lesser currency risk on their revenue, and plus the fact that they're cash rich, and plus the fact that they actually pay a pretty nice dividend at this level. So I like, McDonald's, Procter & Gamble, thus the ETF in that entire sector.
My eyeballs, I have to say, kind of popped out of my head when I saw your next choice. Bank of America, one of the most beaten down financials, yes, so you're buying on a dip here, but a lot of issues, lack of confidence brewing against the CEO, Brian Moynihan, pressure on BAC, right, to sell assets to raise capital. Our Charlie Gasparino's been all over this coverage, yet you see value here. So what's the upside for Bank of America right now?
Yeah, if you think about it, I'm not advocating Bank of America as a long-term investment buy, but as a trading vehicle, I like it. Last week, it got killed about 11%, and they're selling off assets. They're selling off the international credit card part of their business, and they vow to sell off more non-core business to raise the capital, to raise the cash to satisfy the stringent global financial, the so-called capital requirements. I like it at this stage. I think you get about 15 to 20% of upside potential up on the stabilization of the market. Up on that time, I think it might be time to take profit again. So Bank of America as a trading vehicle at this stage, I really do like it.
Yu-Dee Chang, thank you. I guess that's what makes a market, differing opinions. Thanks so much as always, Yu-Dee.
Thank you.
Now the week is kicking off with a big deal. Google spending $12